Good morning and welcome back to Almus Market Mornings. Positive risk sentiment drove markets yesterday, even as we saw a good rally in precious metals. Stocks did well, yields were slightly lower across the curve, and copper is in a world of its own with prices hitting $13,000 per ton. The Venezuela issue seems to be stable. A new acting president was sworn in who was to work with the US. Former President Maduro, currently held in New York, pleaded not guilty on charges brought by the US government. Morning, JK. What's the market's key focus point this week? I mean, a large geopolitical event has already happened. Since then, we have seen reactions in precious metals at least. What are you looking at closely right now?
Yeah, good morning, Swaraj. I think the weekend action, which I see as the new approach of the U.S. Government towards MAGA, that's making America great again, is what I am looking at, because this could be the beginning of more such actions possible. That is what the analysts also feel. In any case, markets have taken it at least quite positively for the short term. I mean, it's the reality is that U.S. Oil companies benefit a lot out of this, and that is why we saw the Dow Jones rally into new high yesterday. And we had mentioned yesterday also these core sectors are likely to do better relative to the tech sector, which did extremely well last year. So the valuation differential might be improved. That's what happened yesterday, and it could well continue. Apart from that, even the financial sector did very well. The I mean, global opinion obviously is not very good for whatever happened, but I think things are proceeding as US wanted, and eventually we will see more oil companies from USA, investing and also, refining and exploring more oil resources from the resource-rich country of Venezuela. And definitely, world will keep looking at what comes next. That's definitely on the cards. As I mentioned, now probably this book looks the Ukraine Russia peace talks on the back burner, and we'll also look at Chinese reaction, uh, because the action by US might have, actually given them the courage to go ahead with whatever they have been talking about, annexing Taiwan. Maybe too early to say, but then, it's a kind of, encouraging such actions. If you could do it, I could do it as well. Um, as far as as I said, the markets are quite strong. In fact, across the regions, Asia was very good. Uh, and Nikkei and Korean markets posted new highs, and that sentiment continued into the U.S. market and the European market as well. We did have some data from U.S. That's on the ISM manufacturing. The trend of a downward shift in the manufacturing has continued, index dropping even lower from the break-even level of 50. There was some, contraction in in employment as well. So that something leading up to the non-farm payroll that we'll have on Friday. So that will be something the market will have to digest and look at. Then, even the yields were quite rangy. As far as yields are concerned, what we are also looking at is a huge amount of possible, money raising by the tech companies stated to be in the region of 250 billion. This is a corporate debt, but still it will have an impact on the markets because the liquidity will move towards a higher yielding corporate debt, and so the bond demand might be affected and the yields might go higher as well. So that's outlook on the bond market, somewhat well supported on the downside. In fact, interestingly, one of the key members, Mr. Kashkari, of US Fed, also said that they want more data to see the bigger picture, but he is saying that inflation might actually move higher eventually because of the delayed impact of tariffs. And then even he's also seeing unemployment rate to edge lower. So both the factors support holding the rates at the current levels by the Fed. In any case, even the market is not expecting the rate to change in January. Next move, if any, could only be in March. And for that, we look at the fresh, full-fledged data from US on the non-farm payroll, the CPI, the retail sales, as well as the core PC numbers later in the month. These are the numbers that January will look at. Oil, as I said, initially there is some consolidation that is going on, although medium term there is a good chance that oil falls towards 50 from the current level of 60, but possibly because market has been selling oil for quite some time. Yesterday's low saw some good bounce from the lows, but I think it's well capped because supplies are going to be higher. Precious metals made another advance yesterday, both silver and gold. Obviously, the base metals are taking a much bigger leap. The improving sentiment in the risk assets, and of course the view that American economy will continue to do well from whatever ways in which they have been adopting. That also supports demand for base metals. There's also news that South Korea will be investing large amounts in some projects in the US that will also help the sentiment and the US economy. So overall, the US economic conditions will remain attractive for foreign investors, and therefore we are seeing the dollar also well supported. And euro in fact broke below 1.17 yesterday, and though it bounced later, it does look like dollar is set to gain more as the economic numbers prove later, and the yields remain well supported in the US. But none of this, all of this actually quite contrast quite heavily in India, where the stock market, which I mentioned yesterday, made a good close on the previous Friday. New high close daily on weekly basis. That did not sustain, and we saw a slipping in the market, and as well as the rupee. Again, weakened, marginally, another 10 paisa. Of course, it is a small move, but important thing is that it is not, coming down relative to the overall, indications of the risk sentiment improving. Two reasons. One is US also has said that they could impose more tariff on India if it does not meet Washington's demand to curb purchases of Russian oil. We have seen reports saying that the Indian purchase of Russian oil has dropped considerably, but it is in what US is saying is it's not completely stopped. That is one thing, and also the happenings in Venezuela, while it does not impact trade, Indian trade, which is quite insignificant in its overall number, but the happenings also look, is portending more such geopolitical actions that may happen, and India remains quite vulnerable to these geopolitical negative developments. That's the reason why the rupee remains on the defensive, and in any case, the valuations in India are still seem to be higher at around 25 PE. If you look at the relative valuation, China is well below 15, and today, in fact, Chinese composite index has hit a new high, and the charts indicate that there could be larger gains. So that the diversification or the move away from higher valued EM markets to lower valued EM markets is continuing, seems to be continuing at least for now. And we need some really unexpected positive development in India to see both the rupee and the stock market gain traction. Otherwise, I think somewhat subdued performance should be expected from both the markets. Yes, of course, it's too early. We are still in the first full week of trading as far as the global markets are concerned. We'll see for new developments and take our views accordingly. Thank you.
Thank you, JK. So, globally, risk sentiment strong. Markets across the regions doing well. Nikkei and Korean markets posted new highs. On the data front, US ISM manufacturing dropped below 50. Some contraction in employment was seen. And an important point which JK mentioned is that there are a lot of private planned issuances by companies in the tech sector in the US, about 200 to 50 billion dollars. This narrative is something we will follow. Oil prices largely in a range, though there was some bounce, but seems to be well capped. Precious metals did well, base metals taking another significant stride, and dollar overall looks like it might gain a little bit. And when it comes to domestic markets, our stocks, contra to what was happening in the global market, slipped. Rupee weakened marginally. Mainly on the basis that, yesterday, I think there was another threat by the US to increase tariffs on India if India doesn't stop to purchase Russian oil. So, again, that's something to keep following for the rupee. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.